Hey there, welcome back to our weekly analysis of SPY, QQQ, IWM, and DIA index ETFs. Let's dive into what happened last week and what we can expect in the coming days. So, last week was quite interesting with SPY nearly hitting a double top at 477. However, this week, we've witnessed a continuous fall, and the good news is that there might be a slowdown in that fall, especially as we approach Friday. As of now, SPY is hanging around the 21 EMA, and when we look at the number of stocks above the 50 SMA within SPX index, it's at 87%, just 1% below the figures from last week. If we take a peek at the 3 months VWAP from the bottom, it's at 454, and currently, SPY is sitting between two VWAPs, one from the high and one from the low. If it breaks the low VWAP, brace yourself for a potentially stronger correction. On the flip side, if it crosses above, we might witness a resurgence in the bull run. So, despite the correction this week, SPY is still holding strong, and we can't label it as a bear market just yet. We're looking at an overall 2% correction from the recent top, which is still considered a healthy technical correction at this stage. Now, looking ahead, we've got some bank earnings coming up next week. It's worth noting that historically, January hasn't been the best month for bank earnings. Keep an eye on that as it could have an impact on the market. Now, turning our attention to the QQQ ETF. It's mirroring SPY's trajectory this week, but with a slight twist. It underwent a correction of almost 4% compared to SPY's 2%. Clearly, tech stocks are facing some headwinds while stocks from other sectors are catching a tailwind. As of now, QQQ is chilling around the 34 EMA, and the RSI is below 50, signaling some weakness in its momentum. Like SPY, QQQ finds itself in between two VWAPs from the high and low of the past 3 months. Breaking through either of these VWAPs could set the tone for the near future. Notably, the tech sector might be in a bit of a holding pattern until the end of the month when tech stock results start rolling in. So, brace yourself for the possibility of a subdued bull run in the tech sector until then. Now, let's jump into IWM, the Russell 2000 Index ETF, and see what's happening there. Continuing our journey through the market landscape, it's déjà vu as we take a look at IWM, echoing the tunes of QQQ, but with a bit more intensity. IWM experienced a 6% dip, surpassing even QQQ's 4% correction. The RSI is hovering around 50, indicating a somewhat neutral stance. I was optimistic about IWM weathering the storm this week, but alas, it ended up losing more ground than both SPY and QQQ. Now, let's shift our focus to DIA, the apparent winner of the week. Wrapping up our weekly market roundup, let's shine the spotlight on DIA, the undisputed winner of the week. Unlike its counterparts, DIA remained remarkably resilient, only experiencing a modest 1% decline. With 30 stocks holding their ground, the market seems to be in good hands. The RSI for DIA is still showing strength, further solidifying its position as the standout performer this week. So, kudos to DIA ETF for weathering the storm. That's a wrap for this week's market analysis. Stay tuned for our next weekly update, where we'll delve into the latest market movements and keep you in the loop. Until then, happy trading.